All right. Well, let's move on to our next company here. I don't think, Chase, people are going to recognize this company. The company we're talking about is Amazon. So,
Yeah. Oh, I haven't heard of that one.
I wonder if there's anybody who's never heard of Amazon. I don't think there's a
doubt
person
it.
in the U.S. that hasn't heard of it. Maybe if they're 5 years old.
Probably. Yeah. I even then, my wife taught as a kindergarten teacher for years, and she said that kids knew like the smile of the Amazon truck.
Really?
It was branded so well that kids even then knew about Amazon.
Did they ask them if they knew about our logo, the W?
No, that was not.
We got to work hard on that. Okay.
I guess we need to get on more trucks.
More trucks. We'll put them on our cars.
They're in the car seats looking out, seeing the Amazon, I guess. I don't know.
All right, let's talk about Amazon, the numbers. Their symbol is AMZN. They're in the internet retail industry, and I think this is another great company, but we're going to look at the numbers here, see if it's worthwhile or not. Shares float only 0.7%. Nobody wants to go against this company currently. Only 65% institutional owned, which means a lot of individuals own Amazon. Now, we do see the PE ratio 31.4. That's just slightly above the industry at 29.1. Price to sales 3.2 versus 2.5. Price to book value 6.7 versus 4.9. Again, valuation ratios, you want them lower than the industry. Price to cash flow 18.2 versus 15.6. And a PEG ratio, which is a big positive, 1.1 versus 35.9, which means you're not paying very much at all for the future growth of this company. We do see the earnings over last year. Wow, up 72%. The industry is up 67.4%. So this is a growing industry. Sales are up 10.1%. That's double the industry at 5.3%. 5-year earnings per share growth estimate from the analyst is 29.1%. That is just blows away the industry estimate of 2.2. So Amazon doing great there. They still don't pay a dividend, which kind of surprised me. They've been around for a long time, still no dividend. Balance sheet, current ratio 1.1 versus 1.4. That's okay. Debt to equity 0.4 versus 0.5. I'll say they have a pretty good balance sheet and pretty good shape there. Net profit margin 10.1 versus 8.7. Return on equity 21.6 versus 21.1. Free cash flow, wow, a lot of free cash flow here, $20.8 billion. The industry is about $17 billion. So they generate a lot of free cash to do all these different things that they do with these, I can't even.
Amazon Web Services. I mean, that's really their
and
big
Bezos,
profit
he
engine.
he also does rockets.
Yeah, but that's not part of Amazon.
Oh, so he doesn't use the money from here to do that? That's his own personal thing?
I mean, yeah, it's not part of Amazon. Okay. He sells off his Amazon shares actually to do Blue Origin.
Oh, Blue Origin, that's the name.
Yeah, so I believe they are totally separate. Right. I mean, Amazon, they're big drivers. Talk about AWS. Their commerce business, obviously, I use it. I love Amazon. It's so funny. Years ago, we would talk smack about Amazon. I don't get it. And I'm like, it's so easy.
You get toilet paper from that.
I get everything from Amazon. I get boxes coming all the time. It's so simple. I don't even go to Costco anymore. I don't go to Walmart. I don't go to Target.
What? You don't go to Costco?
Nope. Amazon's so easy. But obviously that commerce portion of the business, I don't think is where they make most of their money. It comes from AWS. And the big one that I think is interesting for Amazon is going to be the advertising component. I mean, obviously that Prime Video, I think they've really tried to start monetizing that via ads. And then also, too, I know if you're like on Amazon, you can kind of boost your search rating, kind of like almost like a Google type thing, I presume. So, I mean, I think that advertising business is growing nicely for them as well.
We participate for that. I mean, we do advertise. You'll see our commercials on Amazon, movies and TV shows and so forth. But I think it's only in Southern California.
It's only on Prime and Southern California.
Yep.
So, I mean, it's a great business, but looking at the numbers, current price here, $193.06, 52-week range, $151.61 is the low. The high here, $242.52. And I'll tell you, we talk about it being great business. This is one where I'd love to buy it. It's been a growth stock for so many years. At some point, I hope it transitions to a value stock. And I say I hope because it is still expensive. You go out to December 2026, estimated earnings per share is $7.26, gives us a target sell price of $120.52. So it's still pricey for us as value investors. But I will say, the 10-year return, very good for Amazon. I think it's over 800%. But the 5-year return is 60%. And that's still very good.
Right.
But I think it would surprise some people. Yeah. That's not as good as some other, well-known names during that time period. It's almost like Amazon is starting to kind of peter out here and go flat. Again, maybe we could pick this up in 2-3 years because I don't think this business is obviously going anywhere.
I agree with you. I would love to have this business, great cash flow, great business, not going anywhere. It's just too expensive. And what we need is something to happen to have this business be mispriced. And they're like, we'll jump on this like crazy, but we're just not going to overpay for it because the growth isn't there. And again, we're not saying the stock is going to drop, but it just seems when you overpay for something, we've given you a couple examples today, that you're not going to do well going forward. So you want to buy things on sale. Right now, Amazon, it's not on sale yet. It's better than it was not too long ago.